Hi guys, welcome in. In today's video, I'm going to go over is a merchant cash advance right for you and your business. Now, before I get started, if you're watching me here on this live, give me a hashtag live in the comments. I always check those and I always do my best to get back to you. And if you will be here on the replay, something like a hashtag replay will be suffice. This is a bit of an impromptu and this wasn't planned, but I had been thinking about this topic for some time, and I wanted to be more clear about it. For many of you who have already gotten a merchant cash advance, is it really benefiting you? What's the alternative out there? And you're going to be a little bit surprised to hear this one. Maybe you already know about it, but I'm going to be going into it into the share screen. I'm going to be just sharing with you a few other things and then just kind of going over all of that. But again, happy that you are here. And this one video will be very revealing and helping you understand just, hey, what are my options? And are there options that I can realistically go for? Because at the end of the day, you have to, one, know your options. I get you're going to shop around, but how realistically can you get a different type of a business loan? Maybe it's just a cash advance, or it can be a cash advance with a bunch of different products. So that's what I will be going into in this video. Now let me bring up the share screen here very quickly just to let you know where you can get more help if you haven't already. And I released a video today about the 3+ different merchant cash advance programs that I recommend and ones for you to take a look at. I went into them thoroughly, and then I have individuals on them as well. So make sure to look at that video on the YouTube channel so you can see more about those options. But today's video, again, we're going to be talking about is a merchant cash advance right for you and your business's current and in the future needs. And we can even go into a little bit about what the past was. But let me open up this window. Just very quickly, this is the website. If you are unfamiliar, if you are unsure about me still, who is this guy trying to help me get a cash advance, a small business loan, or real estate financing, etc., you can come and find me on my site. We've likely have already spoken and you have a sense, but this will also help you understand how to get faster access as well. This is the website again. If you're new here, we have one-on-one consulting and group program as you're in, digital products as well to help you out in your process. So what is Viral Funding Solutions? That you've already come across. We save you a lot of time, energy, money, and especially the pain of sifting through endless business funding solutions to give you the most legit and helpful source of programs and lenders so you can have a safe, secure, and hassle-free application process. How does it work? Step 1, you submit a pre-qualification. Step 2, you get your funding options incredibly fast. And then step 3, you get funded very quickly. And then our services expand from a merchant cash advance to all small business loans, real estate financing. And there's a little bit of information on there from me as well. You can pick up this free 6-step pre-approval checklist, as you probably already have. And then if you want to go through the blog, just want to show you very quickly before we get into the topic, because I wanted to put this in here in this one video, and I know people have been asking, but if you clicked on there, it'll take you to this more or less. It may change over time, but you can learn about different funding options. I've done reviews on my blog for this. I have an extension to it. So I have a screen opened up here, and I'm kind of just going to go through these things. You might not be able to see it, but I wanted to put it in this format. So it is a merchant cash advance right for your business. So with my notes, the first thing I want to start off at is, what is a merchant cash advance? You're probably asking. So a merchant cash advance is basically where you're given a lump sum of cash for what you can qualify for, and you're taking away a future percentage of your credit card sales / even your debit card sales / receivables, in another word. So what happens is when you take on, for example, you're given a $20,000 cash advance. We call it an advance, technically it's not a loan, because we're not dealing with business type of credit. We're looking more at a personal FICO score, and it has different requirements and different ways of getting funding through it. So it's not technically a loan, but quote unquote, we'll say loan. But what happens again is you're taking away a future percentage of your credit card receivables. In exchange, you are given this lump sum of cash by the provider slash the lender or lenders. And so, for example, you get that 20,000, and then your payback, usually you get a factor rate that can vary between like a 1.2 to a 1.49 or a 1.5. And what then happens is you might get a fixed factor rate. So if we did the 20,000, I'm going through my phone here. So we have 20,000, and I didn't do the calculations here. We do 20,000 times a 1.38 factor rate. That's expecting to be a 7,600 repayment in total, a $27,600 repayment. And you might be thinking that's a little high. And what I'm here to say, and I've said this before, that there isn't such a thing as not being expensive funding, whether that's a merchant cash advance, a hybrid of it, a different type of small business loans. Look at unsecured business term loans. Those may sound great and they have higher qualifications, but the interest rates can be off the roof. And I know we can take into account your revenue, your scores, and all this stuff, but at the end of the day, usually it's right up there. So you have to see if the benefit does exceed the repayment and if it makes sense for you to take it. So that's what a merchant cash advance is. You're taking away a future percentage of your credit card sales slash receivables. So for that 20,000, and then you get a repayment of 27,600 for a factor rate of 1.38, then your fees would be that $7,600 all in between. And there might be additional closing costs or other things that are in between, depending on the company, and that may skyrocket. So you have to be careful with who you are getting funding from, because it's happened in the past and I've seen it, and I've been in that position before where it's like, well, okay, well, I have a repayment of this much, I can handle that, but then there's an extra additional cost that we don't know about. Sometimes you go to apply, you already charged something, so you have to be very careful of that. Now, let me continue forward. So a merchant cash advance is really for those businesses whose revenue comes primarily from credit and these debit card sales. So if your business is making consistent credit card transactions, and even if it isn't as consistent, what we like to see are how many deposits per month are you making into the account. That's very important for us to understand, because the cash deposits into the account, or however much is going in, will determine if you can even repay that advance. When we see you making those sales, those transactions coming through, and the more frequent it is and the higher revenue you're generating, the better off you will be. You'll usually get longer terms. You'll usually get less of a payments back. And I won't go too into depth on how we determine the terms and rates for most programs, but I'll link to a video like that down below in the description so you can learn more about a specific one that I break down that is generally 50% less expensive. You can get up to 25,000 same day instant approval with no interest rates, no collateral, and no hard credit checks. And that's what I'll go over in a little bit, but that's what I would recommend. Look down below in the description if you want to get a hybrid of a merchant cash advance where we don't ask for credit card sales or those transactions. We don't take that into account, and which it takes off a lot of load off your back, because you're not having to stress about fluctuating payments if you don't make any sales, and then maybe the fixed payment won't change, but the accumulation of that, you have to extend it, and then that's usually going to, maybe it'll lower your APR, but then the more sales you get in your business, the higher your APR and the higher that interest can be, because we're knowing that you can make those payments because we're seeing what's happening in the account. So merchant cash advance repayments can be structured in two ways. You can get an upfront sum of cash in exchange for a slice of your future credit and debit card sales, or you can get an upfront cash that is repaid by remitting this fixed daily or weekly debits from your bank account. That's also known as an ACH payment for automated clearinghouse withdrawals. So what this option has become is the most common type of a merchant cash advance, and it's one that's highly utilized. A lot of the time what you're going to see with these types of payments, they are more so, let me move this over. They are more so a daily payment. If you see weekly, it is I wouldn't say it's extremely rare, but it's become more rare. And if you're seeing a monthly thing, then that's also a rare thing because of things with COVID. And then daily is how this operates. and seeing how you are making those sales on a daily basis, or if it's not daily, we get to see how many deposits are being made. And that's how we know when you're taking those credit card transactions what the lenders can expect to get back in return. Now, if you don't make sales for the day, it might not be where um, they're taking a percentage of those sales. Instead, what they're doing is probably extending the term, but that means you have a longer time, and that might not be a great thing for you to pay it on time. And what happens is that a lot of these lenders will look at that and say, well, your business isn't as stable, it isn't as profitable, and it's going to be very hard to, if you ask for an increase, to then get it. And so I see that all the time. Another thing that I wanted to mention too is right now I do all types of small business loans and cash advances. So if you're questioning, okay, does this guy do any other type of loans? I hear him talking about specific programs all the time. Well, yes, I do. In fact, right now I have plenty of people pending for real estate financing. Two, I also have equipment financing. We have business lines of credits, cash advances, many of them. And then the list will go on and on. So I'm dealing with cash out refinancing at the moment, SBA loan types, if you qualify, especially. But that's not just all of them. It encompasses the whole spectrum. And I have a little bit of each. And some of them may be more than others. But I know what I'm talking about when it comes to this. I have a lot of time in this industry with all types of business financing and real estate financing. So, which, by the way, if you're here for real estate financing, then look down below to see your options. I've made content on all around that to give you the best options. So let's continue to move down here. Instead of making one fixed payment every month from a bank account or over a set of repayment period, with the merchant cash advance, you're going to make it daily or weekly. Plus fees are included until the advance is paid in full. The lenders want to get their full amount back. On top of that, you're getting a percentage deducted of your sales. That may be a 10%, a 20, 30%. And that can sometimes be a little costly and hurt your cash flow. And that's one of the downsides to getting a traditional merchant cash advance. But stick with me. Merchant cash advances are very well. They're ways to get fast money. I'll get into some of the pros and cons in a little bit. So how much you'll pay in fees is determined by your ability to repay your merchant cash advance. This is provided by the type of factor rate. As I talked about earlier, it can range from a 1.2 to a 1.49/1.5 based on your risk assessment. So it's already high risk to begin with. For many of you who have been on the fence, and I get it all the time, I see my email notifications where maybe a contract has been sent and you haven't accepted the funding, and you're looking at it and thinking, well, how about these terms and rates? Let's see if I can get it somewhere else. And 99.99% of the time, I'm telling you, that won't be the case. And we have the best providers out there. So if you go elsewhere, it may be the case, but you might get a huge interest rate. And I know specific programs where you don't have to deal with interest rates. Like I said, you can check that down below in the description. I'll get to it in a moment. So the higher the factor rate, the higher the fees you will pay, which is very standard, and you're just going to see all about everywhere. You multiply the cash advance by the factor rate, as we kind of went earlier, by that 1.3 or so. And then I showed you that example of how much your repayment would have been. I think I still have it here on the calculator. The 27,600. Sorry, it's been a really long day. And I usually don't do lives on Friday. But from that 20,000 that you got accepted, your repayment would have been at 27,600. But we have another example that I'm going to go through here. So for example, in advance of a 50,000, if you qualify for it, that carries a factor rate of a 1.4, represents a total payment of 70,000, which includes in between that, you can do the math of the fees. Correct, you're at 20,000. So the total advance you get, it's 50,000. Your factor rate was at a 1.4. Let's say that the total fees you can expect to be 20,000 more or less if there's nothing else on top of that, nothing else is stingy, and then a total repayment of 70,000. So a $20,000 payback, very common, and that can be very minimal, but that's kind of an average. It depends also on if you're an ABCD type of paper lending client, if you have the right type of revenue, the right type of FICO, the right time in business, your background checks out, you have no delinquencies, and so forth. So we have to take that into account. And it wouldn't make sense if the benefit doesn't exceed the repayment. If you won't be stable, you're not going to be making any kind of income. But if you're that person who says, yeah, I can take that's 20,000 repayment, it's okay. Because if I do 50,000, or if I do, let's say 30,000, but you were at 50,000, right? So maybe we gave you that 1 to 2x cushion, and you took 50,000 out of all of that. Then what happens is, well, then we can see that next month you are going to take that 50,000 and you're going to multiply your average sales by 2. So now you're doing 60,000 per month. So that 50,000 was very helpful. And sure, you're down 10,000 maybe if we look at it from 70 to 60,000. But let's say you did 30,000 and then you 4x'd. And that's a very common thing that I've seen a lot of the times with businesses, and they always come back to get more. And so now that 70,000 in a repayment is less than what you did getting 100,000. So that 30,000 cushion, and even if it is less than the 70,000, the thing is you're progressing. And then the next month after that, you may be there, you may be a little bit less, you may be even higher, but you're going to continue to increase your bottom line, and you're in that growth and expansion phase. So the Mca repayment structures, how they work, we already know it's a percentage of your credit card sales. So the merchant cash advance provider who you're getting it from will automatically deduct a percentage of your credit or debit card sales until the agreed upon amount has been repaid in full. Let's say you needed that 50,000 and we went over it with the 1.4, so you owe the 70,000, the 20,000 fees in between. So the repayment period typically you're going to see something very short. And what I mean by short, it varies by programs, but sometimes you'll see 3 to 12 months. Most of the time on average, 4 to 6 months, depending on what type of risk you are, what type of client you are. But if you can qualify for more, then we may extend that from 4 maybe to 24 months. But for a lot of the time, you see these 3 to 12 months. And what we do is we assess how fast you can pay it back. We see the strength of your business, and we know and understand how you've been making your payments. That's why the FICO score comes in handy, because we get to see, are you making payments on time? How much credit utilization have you been using? Oh, you're over that 30%. You didn't keep it under? Well, let's see why that is, and we investigate it. But for a lot of the time, you're not dealing with business credit that doesn't report to the credit bureaus, depending again on the program you are with. And if you don't want that happening and you don't have necessarily a strong business credit profile, which if you want to learn also about business credit, I'll leave links to that down below for some training and some help for you to get started and established and moving forward. But if you don't have business credit, it's okay. With a company like, let me put on the screen here because I'm sure you're tired of seeing me on screen. I'm tired of seeing myself. I'm not the most video generic person. If you guys have gone through my blog content, I spent a lot of time on there as well, but I've been releasing a few amount of videos lately. I just want to help you guys as much as I can. So Bank Breezy here is a great option to go with. You guys have heard of Bank Breezy. They don't operate as a traditional merchant cash advance. Yes, they've partnered with one of the merchant cash advance leading lenders and partners with Biddy Advance, but they don't operate that way. We're not traditional in the sense that we don't take into account all the factor rates. We calculate on total payback, which is similar to a factor rate with a few other things, but we're not taking away some kind of an interest. We're not adding on that. We're not dealing with collateral. We're not having to do any hard credit checks. And we're not reporting to the credit bureaus with Dun & Bradstreet for the most part. And we do those soft pulls in the beginning as well to help you and men along in the process all the way through. So that's how it would work. And then you can see 5,000 plus monthly bank revenue, business checking account, 6+ months in business, a 450 plus FICO credit score, and then all industries are welcomed. So again, this is not a traditional merchant cash advance, as I've been explaining, and we're going to continue to move forward. But you can also get up to $2 million incredibly fast with a David Allen Capital program. There's a lot of benefits to this. You can also get customer financing that have helped a lot, payment processing, and a lot of different more options on here. But I'll leave these videos and links down below for you to get started. Check them out and learn more about it. But let me exit out of this screen, and we'll leave it halfway open there, or third of the way. And then I'll continue with my notes, and we'll just kind of wrap up into the pros and the cons. So in case let's say your merchant cash advance provider decides they want to deduct a 10% of your monthly credit card sales, and that's relatively lower. So you're going to be on the higher end as a client, especially when you're taking a $50,000 advance. It's nothing less. A lot of a more higher risk profile is when you're getting up to 25,000, like the bank Breezy. So when you're offered that amount, I would take it if it's going to benefit and it's going to exceed the repayment. It makes sense. And I would highly encourage that. If it's not going to help you, then by all means, I'm not going to say to take that. So you can only evaluate your business. You only know your profitability. And I did this for a lot of businesses that I used to work for. I used to look in their Excel spreadsheets. I used to go through all budgets, and I used to check everything to make sure where things were running and then the projections and what happened in the past to have better projections moving forward. So in this case, the 10% of your monthly credit card sales until you repaid that 70,000. We'll stick with that example. And your busy restaurant, we're talking about a restaurant, averages 100,000 in credit card revenue per month. What do you think you would repay? If you said 10,000 monthly, that is correct. Now, with daily payments of $333, when we do the math and we calculate what is the term, how much time, how many days are you getting? Okay, so that's a $333 daily payment in a 30-day month. Okay, so you're seeing how much you'd repay 10,000 monthly with daily payments of $333 in a 30-day month. And so from 50 to 20,000, so what does it take? It'll take those 2 months. So what do you see in the term? Now, what can happen a lot of the time is if you don't like that, there are different ways of combating that. We can lower the daily payment, but we will have to, we lower the daily payment and then we decrease the term. So if you were given, let's say, 4 months, but you wanted a lower daily payment, it's not always an optional thing. So what you're given is usually based upon your credit worthiness, depending on the program. If it's cash advances, a lot of the time it's not always reported with business credit, so you don't have to worry about that. But if it's a different program, you have to, with credit worthiness. If you don't have your business credit in line, you can get approved for a lot less than what you deserve. So I won't go into that in this video, but I'll link to more information on that down below. But a $333 payment by no means is it inexpensive, and a little bit higher on that end. But what you're thinking about is the term. And so if the term was longer, then you'll probably be looking at less than a 10,000 monthly payment spread out over time. It might be a 5,000 for the 20,000 that you need to pay back. So, you do the math on that, which I won't get into in this video, but you would divide things and, you multiply to get to an amount. But then that would maybe decrease by 100, maybe more or less. And then you can expect around a $230 payment or so. And then to make that even less of a payment, we can extend it another month or two. But for the most part, like I said, you're not always going to be given that option. And with somebody like David Allen Capital and their Bank Breezy program, you at least get a 30-day, 60-day interval. And then after that 60 days, throughout the duration of your term, you expect to pay the highest, which is usually the 1.69. But if you can pay it in less time, we give you that, and then you won't have to pay back as much. You get done with it as fast as possible, and so forth. So those are the advantages with going to them. But if your revenue, let's say, at this pace, you pay the advance by the 7th month, but if your revenue dropped to 70,000 per month, you wouldn't repay the merchant cash advance in full until the 10th month, paying $233 daily. So that's kind of that. And I know I said a couple of months, but if we extended that 70,000 payback over the duration of those 7 months or so, and you wanted a less of a payment, and again, like I said, we're cutting that in a little bit for an extended amount of time to a $233 daily payment. So as we explain this a little bit more, as I go into this, the speed in which you repay your loan is a factor in determining your APR and can help drive it into the triple digits. So you have to think about that. So that the predetermined percentage of your sales is an estimate that's based upon your projected monthly revenue. So a lot of the times when I ask for what has been the last 3 months like? What is your last month's revenue? And if we see some kind of an increase, or we see something dropping and then stable but then dropping, then there's kind of a projection in line there. And there may be moments where you're like, well, I'm going to use this funding for this. And then it might sound like, hey, yeah, that can increase your bottom line. So the projection might change depending on those answers. But again, we're only speaking theoretically, and we have to be logically sound about this, especially myself when I'm calculating things. The predetermined percentage of sales is an estimate based on your projected monthly revenue. Again, wanted to reiterate that. So since your sales can fluctuate, the speed in which the loan can be repaid could be longer or shorter than expected. So that is where I speak a lot about fluctuations. And it depends on also the merchant cash advance provider. So you have to take into account of that. So 80% of the time, it takes longer than the purchase thought it would take. So fixed daily withdrawals, you got to see a little bit of that example with the $330 per day or $2,331 per week based on how much percentage is being taken away. In this example, the 10%. So unlike the repayment structure that's tied to credit card or debit sales, your payment does not fluctuate with sales. That means you'll pay the same amount regardless of whether sales are up or down. So there's some calculations that you can do in my notes here. So why borrowers opt for MCAs? They're quick. But here are the reasons. You can often get an MCA within a week or so. How are we doing on time? 26 minutes. Okay, we'll cover up here very quickly. Within a week or so, same day instant approval, within 24 hours, within less than 24 hours, without any kind of heavy documentation, not having to provide some type of business credit profile, maybe that you don't have or that you do, but then you have to add extra documentation to the application process. It's more intensive. And for doing like other types of loans, SBAs, we're asking for tax returns and a lot more information in between. We're checking cash flow, deposits, debt to income ratio, credit card receivables, and so much more. So you have to also be careful of that. Physical collateral isn't required. It's unsecured for the most part. So you don't need to put any kind of in asset, take out any kind of equity from a home or elsewhere to put in, like you'd see with most things like cash out refinancing, including bridge loans, hard money loans, and many other ways. So this means you don't have to supply business assets up front to back your financing and risk losing those assets if you can't afford it. However, there is a personal guarantee for the most part, which is a written agreement that makes you personally responsible for repaying that advance. If this is the case, the MCA provider can recoup any losses that in the event that you can't pay. And there are legalities with that. So it's your responsibility. If you say, well, I took this advance and now I don't want it, you're held liable and responsible, and that can be something illegal, and that can take you to court, and we don't have to want to go through those things. Don't be that person. So when sales are down, your payment may be too. When the repayment schedule is based on a fixed percentage of your sales, repayments adjust based on how well your business is doing. Still, MCAs are far from a perfect borrowing option, and you can get some of these advantages with other types of financing products, but again, you won't always qualify for them, and they won't always be necessary to take on. But if your business is also being profitable, it always makes sense to move forward, even if it isn't. It's a great thing to use. So the APR, or total annual borrowing cost, with all fees and interest included, typically can range from somewhere in the 40 to 350%. And that's where it can become very expensive with the traditional merchant cash advance, but they're very valuable and a great turnaround for you to use fast cash to use and apply, and then boom, it pays off. Continue to get more of it. It's by all means a great thing to use, depending on the lender, the size of the advance, and any extra fees, how long it takes to repay the advance in full, and the strength of the business credit card sales that you're producing. This is far more expensive than traditional banks whose APRs you're looking at about 10% or less. So online small business loans with APRs from 8% to 99%, and the business credit cards with APRs from 12.9% to 29.9%, excuse me. So higher sales meaning a higher APR. So for MCAs repaid with a percentage of your credit card sales, the APR depends not just on the total fees paid, but also on how fast you repay the loan. So if your sales are weak, let's say 1 day, 1 week, your payments will then be spread out over a great length of time, and your APR will then drop. If you are raking in credit card sales, right, you're profiting and you repay the MCA faster that way. And subsequently, APR goes up. For example, your company, it might be offering you $100,000 in advance with a factor rate of 1.3 for a total repayment of $130,000. So if you repay it in just 6 months, the APR would be a minimum of that 60%. Now, if you repaid it in 12 months, a little bit more of an extended time, the APR would then be a minimum of 30%. So with the longer term, the APR will be less, but it's not always the case that that will be guaranteed to you. And if you can pay it off faster and that APR is greater, that's fine. That's just how it works. There's no benefit to repaying early for the most part with most MCA companies, but without a traditional one, like Bank Breezy here, you get early payoff discounts. And I spoke about how that works in a different video that I'll link to down below. But payment history will earn you more. Receive funds time and time again. Add-on funds are available for you, and you get a personalized account manager. So those are great things to add on here that are really going to help you with the industry-leading early pay discounts. And they really add up depending on what bracket or what tier of lending options you have. And are you an A, B, C, D type of paper client? So let me continue here and we'll end. So there's no federal oversight. Your credit scores may be pulled depending on the company. With bad credit doesn't mean that MCA provider will at least check your credit score during the application process. Background credit checks are a common requirement for MCA providers. There's a debt cycle danger. May hurt your cash flow depending on those daily sales at times. And that's where I hear a lot of the time. And it can be okay. But for those of you who know that you can pay it back and know that you'll still be stable, you'll make a profit off of this, it very well makes sense. Again, does the benefit exceed the repayment? And if it does, and it makes sense to move forward. Contracts can be sometimes confusing. Again, that depends on the company. Not all of them are the same. Things with like purchase price, specified percentage, and receipts purchase amount, which is a total payback. MCA providers do not provide APRs, which makes it impossible to compare with other financing companies at times. You may also be required to sign a legal document called the Confession of Judgment, which forfeits your right to defend yourself if the company takes you to court, defaults again. And that's just something, okay? You have to be aware of. Alternatives. There are plenty of different alternatives to this that I won't spend too much time on this video, but just know there are many other services out there that you can get access to. You have business lines of credit. You have equipment financing, again, business lines of credit. You have other types of small business loans that are unsecured, bad credit small business loans with different criteria, secured business loans. You have real estate financing, hybrid MCA companies like Bank Breezy and David Allen Capital, which I highly recommend. And that list goes on and on and on that I won't spend in this video talking about. But a line of credit would also be a great option if you are using for cash flow purposes. One, and then if you feel like you don't want to get hurt with cash flow, if your business isn't stable enough and isn't profitable enough, maybe you want funding, but you don't want to use it in a lump. You want to get it in a lump sum, but you want to use it periodically, maybe during some seasons that you will get hit hard or you have been hit hard. That may be a thing. Emergency funds, and it could also be used as working capital for anything else, like a traditional merchant cash advance or a hybrid. But these are great options to go into. An MCA is a good one. Don't think because of the higher interest, those APRs, the fluctuations, that you should withdraw from that, from what you're hearing in the industry and all these things about it. There are many advantages, like I just mentioned, and going the traditional route where you have to put up some kind of collateral, take out some kind of equity. You have maybe better terms, maybe way better interest rates, but at least here you're not having to put up any kind of collateral, not always having to deal with your business credit. You get early payoff discounts with specific programs, 50% less expensive with certain ones like the David Allen Capital program, and so much more. But there are programs out there that help you build business credit at the same time. Doesn't necessarily mean it'll be the best type of funding program for you, so you have to differentiate the two. Most of the time, all merchant cash advance type of programs don't usually build your business credit. They're not always reporting to the business credits or those bureaus. You have other programs out there that can, sometimes like a business line of credit, other types of small business loans, and etc. But hopefully you got a lot of value out of this You understand if a merchant cash out advance is right for you. I would say for the most part it is. Should be one you highly consider, especially when you need access to cash right away. This is going to be the fastest way to get it. The benefits are great if you use it wisely, if it's going to help you, not hurt your bottom line. And it's fundamental. And I've helped a lot of people get these types of loans, a hybrid more so. Again, all types of small business loans. And if you need any help with this, comment back on this video. But if I don't get to you right away, make sure you look at the description if you're watching this on YouTube for all those resources, your application to get started, and everything else in between, and look through all the resources. Okay, thank you.